Hey everyone, happy Thursday, August 7th. It's about 9:15 in the morning on the West Coast, and it's time for another market update. We finally got a positive BLS jobs report for mortgage rates. It's been a killer. It's been one of those ones that comes out every time we think the Fed might be headed towards cutting rates. We get a really strong jobs report, and they don't cut rates. So we got the month of July, and the main thing that came out of this, there was some major revisions made to previous months, even more so than they have in the past, and that led to some newsworthy events that we'll get into in a second. But first things first, let's take a closer look at the jobs report itself. So it's for the month of July. There's two different parts. We get the business establishment survey where they do some math and look at some payroll and come up with these numbers. And the seasonally adjusted number was supposed to be 110,000 for the month. It came in at only 73,000 jobs created. So that was the first positive, step for us in this report. It's been higher, and that's not a good thing for us in the mortgage world. It sounds like it's a good thing, but when the more jobs created, the less likely it is that the Fed will cut their rates, and we want them to cut their rates. So that was the first positive thing. And taking a closer look at those numbers, 73,000 of the 73,000 jobs created, the only positive was healthcare and social assistance, which are important, but not necessarily economic drivers, not necessarily things that make our economy boom. And then leisure and hospitality, which a lot of people look at as consumerism, us traveling, spending money, going places, going to restaurants. That was only at 5,000 jobs created, so that's slowing down quite a bit because that number has been pretty high. So the two things, main things we want to look at in this report, and the first one, as MBS Highway put here, was I guess amusing in some ways, was the birth death model. So the birth death model is the birth of new jobs by the creation of new companies versus the lack of jobs from companies closing. So that came out at 257,000 jobs created for the month. That's take that away. This number is at negative 180,000. So that has been a very inaccurate number. They revised it in the past. Just last quarter, they revised it by 170,000. So again, I don't want to say it's amusing. It's almost so sad it's funny kind of thing. That number, that's very hard to trust. More likely than not, that's going to get revised down, and this number would be even lower, which we'll get into now. So revisions. So for the month of May and June, they did a combined amount of revisions of 258,000 jobs. That's a huge number. When May's job report came out, it was at 144,000 jobs created. Now, after two revisions, we're down to 19,000. That's a big difference. June number came out 147,000 last month. We were all excited. Things are heading the right direction. ADP's job report was low. Maybe BLS will be low. Came in at 147,000. Mortgage rates did not like that. People's rates jumped off of that news. Now, after 1 month of revisions, that's down to 14,000. So for the average for the whole year so far, they're negative 77,000 per month. They're negatively revising these numbers. That's very frustrating because, again, if we got the numbers initially correct, we could have see a completely different rate environment. And then, going into this, the MBS Highway with their little graphic here, the BLS instead of Marvel Punisher, but yes, the BLS punished people, by these inaccurate numbers coming out on June 6th when we got that May report. MBS, so mortgage bonds dropped 52 bips. The 10-year U.S. Treasury yields jumped 13 bips. Those are big different. That's big jumps. That mortgage rates probably jumped an eighth to a quarter of a point on people. So people that had to close their loan at that point had a higher rate because of these inaccurate numbers. Even more so in July 3rd, things jumped 71 bips. The 10-year jumped 25 bips. Those are huge numbers. And again, mortgage rates jump because of this. Because again, when this report came out, it's like, well, now the Fed's not going to cut in July or at their last meeting in the middle of July. So again, it's not only these negative numbers where people were negatively affected, but think about the positive movement we would have got if these numbers came out accurate. If we got 14,000 jobs and 19,000 jobs initially, that would have shown that, hey, the economy is slow. The Fed would have cut rates in July. We would have lower rates right now. People would have had lower rates back then. It's just very frustrating to know that these numbers were so far off. And now, again, we're getting some positive movement off it, but not what we would have got over the last couple months. The second part of this is we get the household survey where they actually call people and talk to them. That's where we get the unemployment rate that you hear on the news from. That came in at 4. It was announced at 4.2, but as you can see, it was at 4.248. So very close to 4.25. And if at 4.25, they would have rounded up to 4.3, that would have had even more of a little of a positive reaction because negative things in the job market. And closer look at these numbers, we dropped 260,000 jobs month over month. Total labor force dropped by 38,000 jobs. And then the main thing we're going to look at here is losing quality of jobs. So, full-time work dropped by 440,000 jobs. Part-time work jumped by 247. So people obviously would rather have full-time work. Full-time work, we have more money, we have benefits, things like that. So it basically shows, again, more weakness in the job market where people are having to get part-time work or second job, things like that, because they can't get full-time work. So again, another sign that the job market is slowing down, which not great for the economy, but great, eventually for mortgage rates, because the Fed, the way they stimulate our economy when it slows down is by cutting rates. So next thing, real quick, BLS. And so after this report came out, as you might have seen on the news, President Trump fired the BLS commissioner. So she was let go, and you can't argue with that. Those are really bad numbers. Those are very, and she's in charge, and whether or not it's her direct fault, she's the head of that division, so that's why she was let go. But the only thing I will comment on that is that, if we want them to cut rates, this is exactly what we needed. Obviously we'd rather have the numbers correct to begin with, but with those negative revisions, now the markets have flipped, and now there's a big expectation, which we'll get into. It's basically a 90% now that the Fed will cut rates in September at their September meeting. So kind of the report we needed. Not too good to see that they were so bad to begin with, but the report we needed. And then tariffs, real quick, still a thing. Still worried about inflation with them. I saw India, there was a new one kicked in yesterday for 50%. So, we're going to have to keep an eye on that, just because the second part of what the Fed's looking at besides jobs is inflation, and tariffs tend to be inflationary. So that's going to be important to keep our eye on to make sure, inflation doesn't jump on us again. Because if the inflation jumps, Fed won't cut. Next thing I want to get into, Realtor.com. Realtor.com showed that their new listings have risen 25% year over year. You might have seen that on the news. They made a big deal about it. Oh my God, there's so many new listings. The housing market's crashing, things like that. But keep in mind that is still 11% below where it was in July 2019, right before the pandemic. So going back to normal times, let's say, we're still 11% below that. So, and also, as you can take a look at this map, you can see that it's kind of risen, not very evenly across the country. So I think 30% of the new listings over that time period are between Texas and Florida. Some of the mountain states, but the Northeast is actually, 40% below most of these states, in the mountain, the lake area, 40% below where they were in 2019. California is a little bit below where they were in 2019. Oregon is slightly above, close to even. But again, just be aware when you see things on the news about inventory jumping, things like that. It's everything's relative. What are we comparing it to? Are we comparing it to last year and the years before that when there wasn't a lot of inventory, or are we comparing it more of a, let's say, a stable, more normal times, going into the pandemic? And like I said, we're still below that nationally. Next thing, initial jobless claims. So unemployment, new unemployment claims are still low at 226,000. Estimate was 221, but I will say continuing claims are now, I think, at 1.975 million, which is, I think, the highest since 2021. So people are not as many, people, companies are still trying to hold on to employees, but once people do lose their jobs, they're having a harder time finding jobs. Again, not the greatest sign for the job market or the economy. Where does that leave us? So average 30-year conventional last week was at 6.79. After this jobs report, after a pretty decent week this week, holding our gains, we're at 6.55, almost of a quarter point drop. So that was, that's great to see. Let's get below 6.5 as the first step. Let's get closer to 6. I think we're the lowest we've been since October 4th right now, which is sad to think about, but head in the right direction. Good to see. That's the biggest drop in a week in quite a while. So I always like telling you guys good news. Next thing, we got inflation data next week, CPI. Towards the end of the month, we get the Fed's favorite inflation, PCE. We'll get this BLS jobs report again, September 5th, and then the Fed meets 9/17, announce their rate, or right now it looks like a rate cut. 90% of the people, or 90% chance they'll cut, 10% chance they'll stay paused. So fingers crossed, we'll keep getting good data. Good to see a good week. If anybody needs anything at all, please don't hesitate to reach out. Have a great week, guys.